Hey everybody, this is Jim at SP500chart.com. It is exactly 1 minute and 52 seconds after the close on January 20. Excuse me. Let me start all over again. This is Jim at SP500chart.com. It is now 2 minutes and 3 seconds after the close on January 2nd, 2013. And, but wow, what a day. The January effect right off the bat. And we're going to take a look at it, kind of try to put it into perspective. And I'm also going to, as my mother used to say, my late mother, I'm going to pontificate just a bit. And that means I'm going to share some opinions on some things that don't necessarily have anything to do with the stock market. But even before I do that, I need to remind you that the website and this video are for educational purposes only. Nothing stated in the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And you need to make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I am just a guy who draws lines on charts. Okay, we're looking at a 30-minute chart in the S&P, and the first thing I have to say is, wow, I got it wrong. Not the direction, but certainly the degree. My feeling is that the S&P would come back to the 1440, low 1440 level, and then sag back down, but no. We get another shortened, what appears to be at this point, another shortened right shoulder. And guys, I'll be honest with you. I wish I'd just pretended to be smart and said, let's look for a shortened right shoulder. Why would I say that? Well, here's an inverted head and shoulders pattern that took place in mid-November. What did we get? A little tiny deformed right shoulder. This, I don't want to say deformed because if you have a birth defect, I don't mean to mean that in a demeaning way, but this looks like an incompletely formed inverted head and shoulders. Then what did we get? Then we were looking at another potential inverted head and shoulders pattern. That when it broke out, I said, well, that looks like a deformed head and shoulders again. Remember, we were looking at this one right here, where this is the left shoulder, this is the head, this is the right shoulder. It broke out. Now that one indeed did come back down because that breakout was not technically significant. But in this little shoulder just wasn't strong enough to hold up that move. Now, if we look at a 2-hour chart, and my lines are going to get all screwy here, look at this big double shoulder on the left side. Then we come down here, then all of a sudden the next thing you know, Scotty beam me up in 1 day or in 2 days. We just go wank and we're flat. It's as if a meat cleaver just ripped off this right shoulder here, and the market just went to town. So, what can I say? Except for that does not give me the kind of comfort, and maybe the market is just telling me, Jim, we're not going to let you be comfortable, but it doesn't give me the kind of comfort that I would like to see in a fully formed right shoulder. So that means I'm going to stick with my long positions that I already had, even back in the low 1400s, but I'm going to wait for a pullback, and I'm not going to tell you what to do, but I am going to wait for a pullback. I am not going to jump on this. And if I wait for a pullback to 1440, if it coincides with this rising support line here, and we come back to the 1444, 46 level, that might be a place where I would add to my positions. But right up here, we're too close now to this upper resistance line in this channel. Now, guys, We've seen this happen before, where you're in a channel or you're in a pattern, and then a move takes place outside of the pattern. Then we end up being back in the pattern. And oftentimes, if you look at this like a series of oscillations, we got pulled back further here. So this move could exceed this resistance line. But if it does, I would be on the watch out for it to eventually come back into the channel and then find support at some point down the road. Now watch those be famous last words. By the way, I told you I was going to pontificate. Yes, I'm going to pontificate. This move today was, at least for purposes of the media folks, this was because of the great news that Congress and the President have finally come to a point to where we can avoid the so-called fiscal cliff. So the markets just take off like nobody's business because we're not going to see that fiscal cliff. Hogwash. What happened was we just moved up to a higher level on the freaking cliff. That's really what happened. Folks, listen. And I'm not gonna play Democrat or Republican or Independent here, but I am gonna try to put this into an analogy. What happened today would be like your neighbor who owes more than he is worth, who spends every year more than he brings in, who is on the verge of losing his car to the repo man. And today would be like that neighbor getting all excited that his worries are over because Citibank screwed up and gave him a credit card. Listen, for every dollar in spending cuts that this deal represents, there's $41 in tax increases. And I'm sorry, it just ticks me off. This country has a spending problem that they refuse to face. This is like your next door neighbor going out, partying, eating out 2 or 3 nights a week on that credit card, thinking it's never going to catch up to him. It's going to catch up to him. It's going to catch up to the United States of America. And I'm sorry, my wife and I have been married for 20 years. Now, I don't want to make anybody mad here, but I'm going to tell you, I don't make a ton of money. I own my own business. In a good year, I can get ahead. In a bad year, I have to lean on savings. But I will tell you this. After the end of 20 years, through hard work and through sacrifice, we have paid off our house. We have paid off land that we own just north of Atlanta. We went out and with the help of, frankly, some money that my mom left us. We went out and when we needed 2 new cars, we didn't finance them so we could have money in the bank. We paid for the cars. We bought them outright. And I know not everybody can do that, and I'm not denigrating you if you've got to finance things. But I will say this. Please, folks, and I'm not a financial planner, but please try to live within your means. Because if you can live within your means, then you'll be better able to weather the storm that is brewing when you live in a country that cannot and continually proves that it cannot live within its means. So, yeah, I sound like a radio talk show guy now, you know. Live within your means if it is at all possible, and you will better be able to weather the storm when it hits in the country that cannot live within its means. Okay, I told you yesterday, I'm off my soapbox. I told you yesterday that I was expecting resistance because of a cluster of resistance that appeared to be on the horizon right here where this oval is drawn, why can I not make, I cannot bring that back on the screen. Maybe I can do it this way. Here we go. I thought we would hit resistance right here. Well, no, not to be. We gap over that. So now I think you've got to look at this realistically. And you have to say, when we gap over resistance, then we have to be prepared for that resistance to now act as support. And that's why necklines, this is our proposed neckline in this weird meat cleaver degenerated inverse head and shoulders pattern. Here's that neckline, and I think we have to obey the rules of technical analysis that say resistance once broken tends to turn into support. Now, we've got all of this stuff up here, and I think you have to look at this and say there's resistance there too. So for right now, it looks to me like we got resistance in the 1467, 1470 area, and we've got support now down in the 1440s. Let's see if that holds out. Additionally, when we look at what's taken place today, and I'm going to show you one other thing, let's go to an hourly chart. And I want to snap a horizontal line. And I'm going to snap that line over what is essentially the triple top average, where we met strong resistance on 3 occasions back in September and October. I want you to see where that is. I'm kind of going with the average there. And I'm just bringing that line across here horizontally. If we go, heck, let's go with the high, around 1470. That also tends to line up with all of this right here. So is it possible that my little descending neckline here is just screwy and not right? You know, maybe. But I still think because of the depth of this move right here, this should define that neckline. But I think we may have some secondary resistance around the 1470 area. And if we turn back there, then that might be a good opportunity to come back to this neckline where one might, I think, consider adding to your long positions. Now, Matt, an astute observer at SP500chart.com, pointed this out, and I came real close to getting into this in yesterday's video, but Matt is a good student of technical analysis and also using some other, tell me if I say this right, I've heard it 2 different ways, Fibonacci or Fibonacci ratios. You can see that if we snap a parallel line from the tops down here down to the bottom, we may also be looking at a somewhat larger channel that is extended with the inclusion of this low in mid-November and also the lows that we just came off of. Now, I mentioned also in our forum that I think there was a reason why we came to this point today initially and then maybe settled back. And that is, you might recall that we were considering the possibility back in December and, mostly through December, that we may be dealing with, and it's kind of been shot out of the water now, but that we may be dealing with something of a rising wedge. Now, I will say that still might sort of be at play here, because if you take this top resistance line that we know is a good and reliable line because of the number of times it's been tested, and then if we take this line right here that isn't quite as reliable because it gave way in early December and it gave way in mid-December, but we still had a number of data points that seemed to at least be reacting to this bottom line, if we look at where the apex of that line is, that's right about where the highs of the day were today, maybe slightly lower. So I just thought that was kind of interesting. And one interpretation of this line would also put it right about where that initial gap up started to turn back today. But as we sit right now, I would expect some follow through tomorrow. But I don't know how long I would expect it to last, because we will be coming upon what should be a number of reasons to expect resistance. So guys, that is the video for today. Pardon me for my pontification. Again, that was a favorite word that my mom used to throw at me, because I've been doing this since I was about 8, and I'm 55 now. So look, guys, that is the video for today. Thank you for watching. I hope you get something out of it. What a day. What a way to start the new year. But hey, keep an eye on it. Keep an eye on it. And I want to say one more thing. When the market reaches a level that is a high, a long-term high, or a level that is a long-term low, we all know that there tends to be volatility at those turns, because the market is trying to sort out its direction, and there's this push and pull that goes back and forth when things reach that point of we're deciding, or maybe we're turning. So it would not surprise me if we start to see more volatility as early in the year. I would be surprised if we just do a straight on easy path to 1560. That would or 1580, I think, is where I think we could eventually end up. But it would surprise me if we do that, and we do that without that kind of volatility that has a tendency to mark longer term bottoms, as we saw in 2009, and what I think may be a longer term top that we could be forming in 2013. So that's it for today. Thanks for watching. Take good care of yourselves, and Happy New Year once again.